Hey guys, and welcome to another video. In this one, we're just going to cover the top three best investment trading platforms for beginners that I believe are currently out there. Obviously, investing is a risky strategy, or can be. You're not always guaranteed to for your investments to increase. So please take that as you will, and please understand the risks before investing in any company or any stocks or shares. Okay. However, I would obviously, if you're investing long term, I'd highly encourage doing so. Keeping money in a savings account potentially won't gain you sufficient interest. It won't obviously keep up with inflation. So, investing in the long term is a highly suggested strategy to keep your money valuable and to keep your money and savings going up. So, anyway, jumping into the first platform to invest your money, I'd highly suggest Trading 212. They've got a really nice, intuitive app. Makes the whole investment journey incredibly simple and straightforward. Now it is commission-free investing for everyone, so you're not having to pay any significant commission like other platforms. And in all fairness, to be fair with this one, as you can see just on this little screen here, if you were to invest in any sort of company, you essentially search it, you click it, you request to make an investment, and then you choose how much value you want to put into that investment, and then you submit it. It is literally that simple. Okay. Now, obviously, investing in specific companies comes with a higher risk than potentially looking at a fund or something. So again, be careful investing in companies on an individual scale. However, Trading 212, like I said, does provide the most simplest and easiest way to invest. Obviously, you can split up your investments and financials into separate funds as well. And when you split it up, it obviously makes it a lot more understandable how your portfolio is performing. As you can see, just purely based on this example, there's a retirement fund, there's a college fund, and there's a house down payment. Obviously, you can switch between individual pots. However, it's quite nice to actually be able to split specific payments and funds and accounts up, just so you can see how they perform. As you can see, you can invest as little as £1. So you don't have to be investing in significant amounts of money into the platform. It is so beginner friendly. It is absurd. It is so much simple and easy than it was 10, 15, 20 years ago. Okay, so that's Trading 212. There's a nice app. It's on the App Store. I'll leave a link in the video, and I'd suggest this is your main one to look into to at least get that investment journey, starting and understanding how the investing machine works. The second one is Vanguard. Now this is a little bit less intuitive in compared to 212, where they have an app. Vanguard does have an app, but it is very, very basic. It doesn't show you much. It shows you your portfolio, how it's performing, and that's pretty much it. However, with Vanguard, the best that I've been using Vanguard for many years now. The best part of Vanguard is they have very good funds that you can invest in. Now, these funds are very diverse. So whereas Trading 212, you can sort of invest in specific companies. That obviously comes with, or can come with, very big risk. Vanguard comes with lots and lots of funds. Obviously, I would suggest doing your own research, but just as an example, the Life Strategy Fund, for example. So this is obviously a ready-made portfolio. And as you can see here, dependent on what one you would like, depends on how risky it gets. The 20% equity fund essentially is 20% shares, 80% bonds, 40% shares, 60% bonds, etc., etc. So dependent on your tolerance to risk, if you're risk adverse, then obviously go with the lower equity fund if you want to increase your risk, but potentially increase your returns, you would go for a 100% equity fund, and if you're sort of in the middle, you might go for the sort of 60 or 40% option. But what these really sort of entail is, like I said, they're very diverse. So as you can see here, this is what these funds are made up of. Just as an example, we've got a UK equity index fund that sort of holds 29.4% value, global bond index fund 29.1%, the FTSE UK, US equity. So just as an example, the life strategy funds, they're sort of probably tailor-made more towards the UK, but they do have some sort of influence in the US, the Japanese stock market. So they cover some of the biggest markets in the world. But as they're so diversified, the risk is a lot less. However, obviously, like I said, dependent on the equity percentage and the bond percentage will define how risky it is. But just as a sort of example, 60% equity fund, over the last, let's just look at over the last 18 months, you can see that it has gradually gone up. You're not going to be making millions and millions on these funds, but if you're willing to invest in these funds on the long term, they should gradually just creep up nicely. So I would personally suggest Vanguard for someone who doesn't want to get into either A, complex investing, B, risky investing, and C, individual company investing. It's probably the safest bet. Keeping your money in a diverse sort of fund will reduce the risk tolerance. Okay, so that's Vanguard. The third and final one, I've looked and decided that the AJ Bell, I think it's called Dodl, is probably the best out of the, it's the third best one. You can invest as little as £25 a month. It's got a nice simplistic basic app. You can obviously invest into ISAs, pensions, or just a general investment account. Nice thing with this is it does come with a 3.8% interest rate on just cash that is sitting in your account, whilst you're deciding what you want to do with the account or the money in that account. So it does sort of give you a little bit of breathing room, and although it's not the highest savings rate, it does mean that you're going to be receiving at least some interest on your money whilst you're deciding what to do with it. Now, as for the fees on AJ Bell's investment platform, it's low cost investing. So it's got a 0.15% account charge with a minimum of £1 a month. So it's completely fair. There's not a minimum like Vanguard. Vanguard does have a minimum, so it is, if you are investing little amounts, I'd probably more likely go with AJ Bell as opposed to Vanguard, purely based on it is 0.15% of the account charge, which is just a minimum of with a minimum of £1. Obviously it's part of AJ Bell, so it is a very trustworthy company, and it is effortless. Like it says, it is so much easier than most other investment models as well out there. You can invest in ISAs, lifetime ISAs, your pension, or just a general investment account as well. So you have got some sort of ability to invest in various parts dependent on your goals in life. Having the sort of potential to invest in your pension is quite nice, whereas the others don't have a specific pension fund to invest into. As you can see here, these are the charges. So yeah, very, very simple, and as it says, this is the best investment platform for monthly or annual charges. So that's the three investment platforms that I would highly suggest you take a look at and look into. I will leave a link in the comment below for all three websites so you can have a look. I hope you enjoyed this video, and if you did like it, I'd really appreciate a like or a subscribe. And if you want to see any other videos, anything whatsoever, please leave a suggestion in the comment box. I'd really appreciate it. Give me some ideas on what to do next. And yeah, have a great day. Thank you guys. Goodbye.